The reason. What's going on, everybody? Happy Friday. We got the 4th of July coming up this weekend in the United States. I think today is the second. Uh, what's going on? It's a Friday session. I'm looking forward to this one. We get to kind of change the pace up, but more importantly, with today's jobs numbers, there's just an explosive amount of information to talk about in the markets, how the markets are pricing in, what's next. This is going to be a good session. I don't know how the flow is going to begin in the morning, but I know this is going to be a really good session. So watching, I did an airport run yesterday. So I was in the car and had the opportunity to listen to some podcasts, listening to some discussions, really interesting stuff to talk about with you all. We're looking at Bitcoin trading this morning at $33,172. It is barely holding on here to this little bit of line of hope, and there's another one below it. It's not looking the greatest right now, but this could be leading to bigger and greater things. We're going to talk about it. We're going to put everything together. I love this quote that Miles shared, right? The happiness of your life depends upon the quality of your thoughts. You have the ability to shape your future, right? Growth mindset. Tomorrow, I got to sit down with Justin yesterday. We had an incredible conversation. You're gonna love it. Tomorrow, the Saturday morning CTM coffee and discussion is going to be an interview with Justin. Really, just all growth oriented mindset. You're gonna love it. Miles, again, sharing here the importance here of how you shape your future with your thoughts. We're gonna look at that from an investor's perspective today, or should I say from a saver's perspective, not an investor's perspective. A lot of people are speculators, right? Nothing wrong with speculating. The great Jesse Livermore, the greatest speculator of them all, he made two fortunes and lost three fortunes in his life. The idea is to keep it and hold on to it and set the next generations before us so that they have the possibility to not only thrive, well, not only to survive, but to thrive in this world that we're living in. Let's go ahead and make sure that we're able to shape it together. I love this morning seeing all of you and where you're at. I mean, Alan, for sure. Thank you for mentioning it. For sure, we're gonna bring in Head Snack. No way. Matt has a baby. Matt, congratulations from my family to yours, from the CTM family to yours. Congratulations. That is just wondrous news. Many blessings upon you. I hope your wife is doing well. I'm sure with you and watching over the family, everyone is doing well. And Christopher is doing absolutely fantastic. Thank you for asking. He's thriving. Mom is like the best of the best, and there we are. So, what a week we had here in CTM. We covered so much stuff. I think that if people just focused on the videos that we did the last 2 days, when I say people, I mean people on the World Wide Web, on the internet, they get so lost in all these discussions that are just like so far off signal. And they're really good at it. You get people like with these headlines that are like, insolvency risk, the markets are going to crash this week, and people really don't know and understand markets. I was listening to actually Kathy is her name, Kathy Wood, who's ARK Investments. Kathy, you know, if you don't understand markets and you're listening to this lady speak, I could really understand how really quickly you could be led astray. Now, wait, she's great to like listen. You want to have a triangle of points and you want to listen to discussions on all different sides. But some of the things that people say when it comes to just like markets 101, if you do not understand markets 101, you would say, wow, this person sounds smart. What they're saying is true. And it sounds really intelligent. Usually, when people are going on and on and on, and it's really boring and it doesn't make sense, there's a reason it doesn't make sense. You should be able to simplify down concepts really easily. That is the greatest signal there is. And when we talk about simplifying markets down, what happened? Do you remember what happened last? A lot of you joined this channel, well over a year and a half ago. It was really during the March crisis when many of you were introduced to conquering the markets. It was during this area over here as people went into lockdown, the markets were crashing, people were looking for guidance, they didn't know what was going on, right? And you saw us here in CTM riding this move down, right? Because, if you go back and you watch these videos, I'm selling S&Ps and I hadn't touched S&Ps in like over 15 years. since I was trading the E-mini futures on the 3-minute time frame, like back in the day for real. But like I saw the markets breaking down over here. I jumped into where, the money was to be had. And then people started following us on the way up. And what happened? Over here on CTM, we're like, wait a second. The Fed just expanded their balance sheet by $4.1 trillion. We have massive amounts of quantitative easing going forward. We're following the liquidity. You have to buy stocks. QE is uber asset inflationary. That was taking everything and simplifying it down. If you look around you, and you saw what people's opinions were back over here, and because, this leads to this, and this leads to this, and this leads to, if you followed what they were doing over here, right, and what they're doing today, you have to like line up the dots and see if what they said made sense back then. You have to see if what they said 6 months ago made sense to where they are today. You can't keep just following people's narratives without thinking for yourself. What has changed between over here and over here? What has changed? Because I remember just 2 weeks ago, across the World Wide Web, the internet, right? Everyone was talking about this. The stocks are going to crash. That's what was going on. Powell met. They're talking about in 2 years from now, they may raise rates. They may not. Like, don't follow the dot plot anymore because it doesn't make sense. And like, even though we're like, we're not going to have the conversation about tapering. Well, now we're having the conversation about tapering. Only we know we can't actually pull liquidity away because if we do, everything's going to crash. And if that happens, we have to add more liquidity. And it's all like nonsense, right? What's happening? Well, the $1.4 trillion in additional yearly purchases continue out of the Fed. The ECB, same exact thing. What is it, $1.3 trillion? Either which way, they keep artificially just providing this liquidity, printing money out of nowhere. It's got to go somewhere. It goes into assets, right? That's what happens. Now, is this thing going to crash? Yeah. There's going to be a time, there's going to be a place when we see a severe and sharp correction. Will it resemble anything like this? Most likely not. This was a once in a lifetime opportunity. Now in my lifetime, it's happened twice because I lived through a previous crisis. I was here for the 2008 crisis, and I remember it very well. I remember, by the way, the two massively best opportunities I ever had in my life, in the traditional markets for making money was both the 2008 and the 2020 crisis, right? And I crushed both of them. Right? Is there going to be another crisis? One day. There's no question about that. How are they going to react to that crisis? What else could they do? Right? We know how it works. A few lessons during this crisis compared to this crisis. This one was like a slow motion train wreck. It took a long time to play out. This one happened like rapid fire pace. Warren Buffett, if you remember, was sitting on, what was he sitting on? Like $130 billion of cash, waiting to deploy that to the market. Only he never expected the Fed's response to be so sharp and so quick, right? It was so sharp and it was so quick. Is that going to happen again if we have some type of crisis? Doesn't look like the world is about to go back on lockdown, right? In hindsight, that was a horrific, drastic mistake. But no one knew what was happening. Or some people knew, but we didn't know what was happening, right? So what did they do? Like there was fear everywhere. The world economy went to a standstill. And the markets priced that in aggressively, right? And then the central banks, because the system was broke. Here's what most people forget. Coming into this area over here, the system was so broken, it broke back in September of 2020. 2019, it broke when the repo market got out of control. And constantly every month we're talking about what's happening in the repo market. I WhatsApp my family over here in September 2019 and let them know, listen, the system's broke again. It's only a matter of time. Did I expect for this to happen? Absolutely not. Absolutely not. There's one thing between seeing the matrix with coded monetary supply, and there's another thing in the traditional markets. But we were there. It happened. It's not happening right now. It's not. Right now, we are seeing the equity markets here making a new leg up. Look at this. This is where people were telling us the markets were going to crash. What did CTM do when they told us the markets were going to crash? We pulled up the charts. It's over here in this area. It's over in this area over here in the middle of June. And people are telling us markets are going to correct. And I see it in my own home. In my own Discord, I see the people, the fear, the markets are going to crash. So I pull up the chart with you all. We look at what's going on in the chart. We say, all right, well, we are in a rising wedge. And if that breaks down, that could be a little nasty on the downside. But it hasn't broken down yet. So we don't have any type of indication that this current trend that's in place, which is uber bullish over here, is gonna not continue further. The support wound up holding. Not only that, over here on the top side, we broke out to the upside. Breakout, retest, and are now resuming off over here. Why are the markets resuming up this morning? What happened? What's different? We had the jobs number this morning, and it was a good one, right? We had, a little bit of a beat, like, we were expected to 720,000, and we added 850,000. And it's nice because instead of always missing, you have a little bit of beat. Why? Consumer confidence is dropping. We got to get the morale up over here. We got to make things look better. Yeah, of course. Some states are taking away these federal benefits to pay people to keep them home, right? How could there be jobs if the government's paying people to stay home? And if there's no jobs, then the Fed needs to continue with their uber easy monetary policy. And if the Fed continues with their uber easy monetary policy, what's going to happen to assets, right? So over here, we have a small little beat. Now, it's not what we're expecting over here. JP Morgan telling us months ago that we're going to see these uber hot numbers into the rest of the year. And the market by the end of 2022 is going to be, return to normal. And is that when the Fed tightens or begins to tighten? It's quite possible that actually it's not transitory, that inflation winds up, picking up its head a little bit, roaring, and at that point, the market forces the Fed to raise rates. That could happen. Did you see what happened over in Russia this week? In Russia, they're raising rates. In Russia, they're like, I don't care what they say over in the US, inflation's real here. We're not like lying to ourselves, and we're raising rates. It could happen sooner, right? But in the meantime, what's going to happen? How are you protecting yourself? All right, the markets, they're doing what the markets need to do, right? They're going up. They're following liquidity. That hasn't changed, and they continue to look super healthy. Are we coming into any particular place where we see that the markets might be getting set to correct? Not yet. We're not even looking for it anymore as the possible bearish breakdown, as we are on the verge of like, maybe we break down over here out of this rising wedge. Since then, we're now making new all-time highs. We look so good. If the markets start getting away from themselves to the upside and going vertical, especially into the upper end resistance. By the way, these charts over here, a couple of things. First of all, the chart markup, because I have my bad line over here. This is the line I did with all of you in white, right? And you could see that it's a nice try, but Giles over here, he went up and did a full markup at the S&P 500. And I didn't plan on even talking about the equity markets here with you today, but here we are. But, I want to do a upload giving a really market update on the equity markets. And when I do that, I'm going to show side by side Giles' chart and his artwork over here and why his red line over here is more accurate than my line over here. And not only that, take us back, because you all remember back during that crisis, back when this is November. Do you remember over here during the election? And I drew in these two trend lines over there. Again, Giles found them. He found them tight. He found them right, And then going back over to here when we marked up the whole S&P while we were focused in on it, because up until July of 2020, the summer of July, August 2020, this is when we were hyper-focused, and we had all these trend lines coming up. They're still in play today. It's the same exact trend lines that we were following back in the 2020 up until the summer of 2020 that are in play today. And again, we continue with our guide. And I wanna watch over here as we're breaking outside this channel over here. This resistance. This was resistance for a couple of months, and price was what? Consolidating in that resistance. It's now broken above. It's also retested and breaking out, right? Are we now targeting perhaps the upper end of this channel? I don't know, but what I do know is that most of the people, right, are telling you the whole way up, right? What are they telling you? That this is not right, this is not correct, this is not healthy, and then the markets are going to crash. It's why we have Head Snack telling us the markets are not crashing. It's probably the most important meme in all of the markets, and few pay attention, because I still have friends, by the way, since 2012 have been trying to catch the market top the whole way up. You know, whose fault is that? I'm not really sure. Is it the people out there always talking about the market? You know, Sven, right? Look, I don't mean to call anyone out, but if you're constantly like giving people the wrong side of the market, then that's what you do and who you are, right? And we have Sven, North Drum Trading, the whole time telling us how bearish the markets look and why. And then, by the way, when it happens, when the markets do crash, here's where he flips positive. Go back and watch it. I called it out in real time on our channel. As the markets were crashing and we're holding and actually adding to our positions and saying we're no longer swing traders. This is the markets are crashing. Become a position trader. Ride out your risk off trades, your Japanese yen, your Swiss franc trades against the commodity currencies. Hold them, push them. Here with the S&P 500, making this is where they it's like always people are trained to take like the counter trend of the market. All right. So anyway, I don't know where that rant came from. But that's where it is. What's going on with the dollar this morning? That's kind of more important before we even get into Bitcoin, because the dollar is coming into that strong neckline and being rejected by it, possibly so far, right? Now, this is the neckline over here of the inverse head and shoulders. If you're watching this on the replay today, I hope you have a wonderful weekend. Thanks for spending all the time. And by the way, tomorrow, Justin's interview is highly recommended. Have some coffee, enjoy the interview whenever you can during the day, during the weekend. By the way, please go ahead and smash the like button and help support this channel so other people could see the work that we're doing here today in Conquering the Markets. And again, if you didn't watch the last two videos, Wednesdays and Thursdays of this week, that's your homework. You have to watch those videos. You have to know where we are going forward, you know? And once a week or so, we're going to make sure everyone is aware of where we're going. Thanks for smashing the like button. Thanks for supporting. You're looking at an inverse head and shoulders over here, right? And by the way, if you want to smash the dislike button, right? Because the light is too hard for you to deal with, because the truth is not something you can handle, because maybe you're sensitive. Maybe you're highly sensitive and you don't like people talking to you straight. You rather they lie to your face. You're the type of person that likes to believe in narratives. You're the person that likes to be told everything's okay. Do not think for yourself. Do not make up your own mind. Do not even think about thinking for yourself. Then go ahead and smash the dislike button. That's all good too. That's fine. It actually really helps the channel when you smash the dislike button, because it shows there's interaction going on with the channel. And listen, it helps me know who you are. So there you go. So we're looking at an inverse head and shoulders, right? This was pointed out by Raul, who was the first person that I saw pointed out. And this is big signal over here, right? If this breaks here out to the upside, we could expect some follow through, perhaps into my trend line. We'll talk about why that trend line's there. It goes back to 2008, 2007, during that last crisis. And if we need to talk about it, we'll talk about it. We'll also talk about why a lot of people get that trend line wrong. But we don't need to talk about that yet unless we break out of here, right? Unless we break out of here. And right now, and that could be as early as next week. It could happen today. But right now, we're seeing the dollar unchanged on the day. It's coming into some resistance, and it's finding that resistance. What happens from here? Listen, we'll take it up on Monday. We're at a big inflection point, right? Breaking out over here, we could continue to see massive follow through. Rejected over here, right? Where we had, I don't know. This is no man's land for me. above that trend line over here where Will called out the break of the trend line, losing that dollar momentum, selling momentum. We are just in this neutral area. I'm not going to get chopped up. You got to be careful about getting chopped up during neutral periods. By the way, right? It was over here in the summer of 2020 when we talked about, hey, listen, the equity markets could be starting to go sideways. I didn't expect them to continue to be going, the equity markets, the dollar, for so long. But here we are, right? Are we getting ready for a big move, right? It certainly looks like that. Is that move going to be to the upside or to the downside? We'll wait and see. We'll follow price. I don't know. Also, yields, right? They're coming off the lows this morning since the job numbers, and they continue to be consolidated. The markets are getting ready for such a big move. Now, a lot of people, or when I say a lot of people, the people who over here told you that this was going to be deflationary, right? There were a lot of macro bros telling you that this was going to be deflationary. They were adamant about it. I mean, there were heated discussions. And I was like, oh, I'm following the liquidity. This is uber asset inflationary from day one, right? And now over here, they're doing the same thing. The Fed's mid-cycle, not just Bitcoin. The Fed's halfway, more or less, between them having to change policy until they start tightening. They're not tightening today. They're verbally intervening today about tightening. That's what the markets did here in this area right now. They're verbally intervening, right? And what happens next? Well, that really depends on the market forces, not so much on what the Fed wants to do. You can't listen to people think that the Fed is always wrong. The Fed's not always wrong. They know exactly what they're doing, and they're masters at it. They're masters of money. They know what they're doing is they're stealing money from you, right? And what they're doing is they're making sure that their shareholders have it. That's the whole purpose of the central banking system. They are completely enslaving you, and you have no idea. Oh, wait, Jordan, don't talk about things like that because I can't handle it. I've been trained that no matter what I do, I'm going to get credit, Jordan, right? I could run a race and come in last, and they're still going to give me a trophy. I don't even have to work anymore, Jordan. I could stay at home, and the government pays me. So don't tell me, Jordan, don't tell me to think or to learn to think critically. Why do I need to do that, right? So here we are over here. We got the macro bros, and they're calling again deflation. The market's been wrong this whole time, they say, and the people who are on the right side of this trade, they're wrong, they say, and the market is now going to correct and catch up to them, right? So that for like 2 or 3 years, they could be on the wrong side of the trade. And then when that does happen again, because listen, are we going to see dollar strength again? Are we going to see the dollar potentially like breakout bull and then even, trade up towards this, between 94 and 96, maybe getting hot? Maybe that could happen, right? The dollar is still stronger than every other fiat currency out there, any way you look at it. Now, is this the environment for that to happen? Well, there's a lot of dollars out there, Jordan. Actually last year, they printed 40% of the overall supply, right? So right now, as we look around, they start talking about, here, let's spend another $1 trillion on infrastructure. Let's give another $1 million in rent and landlord forbearance. Let's these cities are an absolute failure. Let's give them more money. If that trend continues, we're going to see the dollar roll over here. But it looks like we're having a little bit of problems over there. Well, is it problems, or actually are we seeing the economy is running so hot, it really doesn't need that extra little bit of love, that extra little bit of destruction. It's destroying our future and our children's future. Maybe right now is not the time, and maybe the dollar is going to strengthen over here. We'll follow the charts and we'll watch what's happening, and we'll make sure that we stay on the right side of the trade, because there's no way I hold from here and then hope this whole time that the dollar comes back. This is not how you do it, right? And same thing over here. If we break down outside of this flag over here, this bull flag, by the way, and if we break out to the upside, watch out, we're going to see yields rising. And that will put pressure on the precious metals. That will put pressure on gold and silver. If we see them break down over here, all right, maybe that's the time. And we have to look at the metals. We have to look at the metals, right? Listen, The deflation inflation debate will be another time. It's not going to be here right now because it's going to get its own separate video. I've been very consistent for a long time on this channel over here that technology is uber deflationary. Technology is deflationary. There's no question about that. Jordan, all this money's created. The banks aren't lending. Yeah, because the government's giving directly to people now. Are you guys missing what's going on? Did you miss the greatest signal of what happened over here? Do you know what happens in the future when they release the digital dollar and the banks are kind of like bypassed completely and you're getting Fed coins sent directly to your Fed wallet inside your app? You know, you have on your app and it's the Fed wallet and they give you the digital dollars and then they make the digital dollars disappear whenever they want if you're not spending them quick enough. The banks are gone. The macro bros believe that they're still living in the world that they were living in 10, 20, and 30 years ago, right? Gen X has the advantage of what? We live life, we're like the trailblazers for the millennials, right? We're able to deal with change. We embrace change. We're looking for change. All right, let's go. Let's not get caught. You know what else, brother? Well, let me finish before I go on because I want to get into gold and silver and I want to get into what's going on in Bitcoin over here. And then there's also a lot of stuff I want to talk about. Really good question over here from John about where we are. I want to talk about it all. We haven't even gotten started yet. This is actually the introduction, right? But the macro bros are really good at philosophy, right? When you see people spending an hour of time like philosophizing about the financial system, right? You're so far out of the game that it's ridiculous. It sounds good, it sounds intelligent, and you're left asking yourself, well, how come I don't understand it? Because it doesn't make any sense, And that's where we are. All right. I thought you were telling me that I'm upside down. All right, if we break out of here to the upside, that could put massive pressure on gold and silver going forward. If we break down over here, right, then this could be the near-term bottom of gold and silver, and they could be off to new all-time highs. This is a big deal watching the resolution of this pattern over here. It's not dead center, it's towards the bottom over here today, but we don't know which way it's going yet. We have to wait for that breakdown. We'll continue watching it. What's going on with gold today, right? You could see that we took out the lot of stops over here below 1760 in that area. The daily didn't close below there, but traders had their stops definitely too tight, right? And you could see that looked like a little bit of a liquidity trap. And now we're towards the top of the range, but we're still in the range. And there's no clear signal. Does it look to me that the market is making a bit of a stand over here, this resistance around 1796? It seems pretty clear to me. If you extend that over, right, you can see over here where the market's finding resistance. If we get above it, is it too soon to start attacking? I think so. I'm not ready for it yet. I'm going to pick my spot and you watch. I'm going to get it right. When it's time for us to take another look at gold and silver, we'll line it up. I think it's too soon and it's kind of preemptive right now. We don't know what the next move is. Silver looking good over here though, right? Silver is taking out the resistance. It's kind of leading gold a little bit. And we said once silver gets above this area, is it time for us to be looking perhaps then for a long? That could be setting up, That could be, listen, not yet, not this week. If on Monday, if on Tuesday, we start seeing this being flipped and this area, it doesn't have to be the resistance where I drew it in that like at 26.32, right? Price could come up over here and you could see that like that was what the market's paying attention to. If we come in and we firm that area and resume off, that could be a good aggressive entry on silver. I think because it's not like a clean, it's not a good entry. It would be for more of a short time swing trade than looking to actually catch the bottom. It's a lot different of a multi-month breakout of a trend line and then looking to see that move really go off, right? But this could be a potential swing trade. We'll watch out for it. Bitcoin this morning, it's off its lows on the day. It's hanging in there. It's hanging by a thread. We want to hold this line over here. If we lose this trend line, then it looks like for sure that this is our next line that we're looking at. It could take out, the last lows over here over the weekend. It's entirely possible. It's very fragile and it's unclear. And people can't stand that. right? Do you look, there's a day, it's on video, and it's May 14th when I say everything. The day before I said it's muddied also, but on May 14th, I'm actually Friday, another Friday like today, I'm like, things are absolutely muddied and unclear right now. I'm getting neutral. And since that day, I have not changed the tune at all. I keep saying things are unclear, right? Things are unclear and they remain unclear, but people don't like that because they want to know and they want it now, right? Well, it's not like that. Even when we broke above this trend line over here after being that, and the day we broke up it, watch that morning's video on June the 14th, June the 13th, and I said, things are still unclear. That does not make things any clearer. It's not time to get aggressive. It's not time to start trading. Things are unclear. And it happened that that was rejected and we went in and we made some lower lows over there, right? And okay, so we start repairing. We got above over here. Again, it's not until we get over here that we regain that clarity. But a lot of people this whole way, they're like, I can't wait for that. I need to get in here. And then like they sell and then they buy and then they sell and then they buy again and then they start selling. And then they like, I keep buying and I keep taking losses. So now I'm going to sell. And then they sell and then price shoots up and then they have to cover and they're getting whipsawed around and they're losing their stack. If you are trading Bitcoin, by the way, then in this area over here where Bitcoin has been in a range of $10,000 back and forth, that's not where you look to make your money. You look to make your money when we broke out of into the bull market and went up massively 5-6x, in months. That's when we were doing it. That's how you do it. If you're doing it now, you're still doing it wrong, right? That's okay. You're going to get it eventually. Let's take a look. John K over here. He's looking at the previous cycles and he's saying, look, I still see they're averaging the last two price wise, but I'm curious what's going on over on Team Conquering the Markets and how they're lining those cycles up, conquering the markets all day long. And listen, we have over here, we have Ted's staging model for the CTM model over here. Ted the Architect, right? That's the title, the Architect, Ted. Ted the Architect over here, putting together, whether it's the stock to flow model overlaid over here, whether it's our log trend lines over here. Here's the yellow one, the important one. Once we get above it, that's when we're looking for really price to take off. Brad and Scotty have been really pivotal in pointing out that line over there in the work that they've contributed. And we're wondering what's next, right? This is how we're lining up. This is just a stage model. If Ted has the opportunity today, he's looking at some input from Ian, looking to go ahead and get it in there. It's a beta model. It's not released yet, but if you want the clarity, and I think this model offers the greatest clarity there is out there, right? And I want to talk about models a little bit. I heard Michael Saylor again yesterday. He did a discussion over on Into the Cryptoverse with Benjamin, and it was like a 2-hour discussion. I got to listen to the majority of it yesterday. Highly recommend listen to it. Michael Saylor does a great job of, with high degree of clarity, destroying the case for all altcoins. If you want to listen to it, actually in the discussion, Benjamin is like, forget all altcoins. Like, obviously, there's no case for them. But, he covers altcoins, right? That's what they do over there. They cover Bitcoin, Ethereum, Cardano, and like altcoins. And, but then like the discussion becomes between Ethereum or not. And Michael Saylor, you have to listen to this because a lot of people and a lot of smart people, like the Winklevoss brothers, they make the case that no matter what, Ethereum's a win, right? Even if some other technology comes out that's 10 times better than Ethereum, Ethereum has that first mover advantage where it's going to be a win, right? And think of it like Android versus OS, right? Android has the greater market share, right? OS just takes a portion of that. Is Ethereum going to be? But Michael Saylor makes the point out there, listen, you think that Ethereum's case is DeFi. Do you think that the authorities, who are out there regulating every exchange are going to allow DeFi to take place with US citizens participating and not know, KYC or where the money's coming from? He's like, absolutely not. And as Ethereum 1.0, which is considered, property, which is considered, an asset, Ethereum 2.0 might not. We don't know how the regulator is going to look at that. It's an enormous risk. Well, listen to him articulate it because it's important. But then he starts getting into models. And, Michael's point of view is that like models are irrelevant. Why are models irrelevant? Models are irrelevant for a couple of things. You should be thinking of this as from like a technology standpoint, which is totally true. And we've pulled up even last week the graph that we looked at, the adoption of the internet, and we look at the adoption of Bitcoin, and we say, listen, we're still really early. You're an early adopter right now, and why? And why it should be some time, before we start looking at diminishing returns. Diminishing returns is a thing. Only Bitcoin is an infant. You're an early adopter, right? Bitcoin is like, what is it? A 500, a 600 $1 billion market? Come on. It's so early. It's ridiculous. People are talking about, Michael's talking about Bitcoin competing for that $100 trillion M1, right? There's $400 trillion of out there when you put in all derivatives and everything else. It's so early that it's ridiculous. And he says, if at any time you start seeing massive adoption take place, whether or not all of a sudden that floodgate of that $100 trillion is opened up and pours into Bitcoin, the black hole that sucks it all in, like, of course, all models are going to break to the upside, right? So is the risk to the upside? Always. But when I look at the markets, right, what do I see? And he says, listen, the dollar devalued by 37% last year. The model I follow, he says, is that the dollar has been devaluing by 7% on average year over year. And we look at the matrix over here, and we look at the devaluation of the dollar since the Federal Reserve's inception in 1913, and we look at Bitcoin since inception, and we see and we know what's going on, right? But at the same time, he's telling us you can't follow any models. And I'm following the model that last year the dollar devalued by 37%. Well, if you understand markets, and I understand markets, you know that the dollar is not going to devalue 37% again next year. Why is that, Jordan? Well, the Fed expanded their balance sheet by $4.1 trillion. They printed 40% of all dollars in existence last year. They're not set up to do that again this year, right? Because it goes like big expansion, and then we level off until we like start tightening and cause the next crisis, and then we expand again, right? So, if you're telling me don't use a model, but your model is that the dollar devalued by 37% last year, therefore you think that's how you're following a model, except you're doing it wrong, right? I really don't understand why the interviewer didn't call him out on that. I would love to have a discussion with Michael because I love how he articulates so many different concepts about the bullish case for Bitcoin and money itself. At the same time, it doesn't mean because he's the Chad of old Chads that you can't call him out there, right? And as it happens, we do have a model that is proven correct for the past, 10 years in Bitcoin. It's called the 4-year cycle, right? And there's no model that comes as close to being as accurate as you can with predicting human psychology around that coded monetary supply. Now, will it break one day? Are we going to see one day the Fed lose control of the financial system? It could happen. It's a very low chance. I think those guys are so smart and so calculated that it's ridiculous, right? And when they say that like they're there to stop inequality, they know for sure that they cause inequality and they're doing it on purpose, right? Those guys are good. Now, do I think that, that like Michael said, that it's possible that Apple introduces, a Bitcoin wallet on every single smartphone in everyone's pocket, or an Android does it, and that we have all of a sudden 6 billion people that have access to not only, digital currency, but also digital assets and Bitcoin, and that will see massive 100%. The risk is to the upside. Like the risk is massively to the upside, but that's not happening yet. Are we going to see like Ray Dalio? Look, I'm not buying bonds and I'm buying Bitcoin. Are we going to see that massive? I lost track of the number. When I started, it was $17 trillion of negative yielding debt. And then I think the last I checked, it was up to like $77 trillion of negative yielding debt in the world. Is that eventually going to find a place into Bitcoin? Well, I believe so. That's the bullish case for Bitcoin. Is that happening today? No, what's happening today and right now is that we're looking forward, right, to the next Fed meeting and Jackson Hole in August. And we're looking to see what little nuances they put out there verbally and how that's going to affect the market. We're now starting to watch the jobs market. Do you remember this morning? We're looking at the jobs market. Do you remember 2 months ago on this channel, I said now going forward, we're going to have to start watching the jobs number. Look how the market is paying attention to the jobs number this morning, right? By the way, the DXY is undecided. It's unchanged. It's unchanged. Next week is setting up some major inflection points. It's going to be good, right? Bitcoin also now unchanged. Good. Where were we? The bullish case for Bitcoin models. Models happened. You don't get any more accurate than this, in my opinion. Now, listen, it's not. It's just a guide. It's the guide, by the way, that has helped me position into this trade way early. It's the guide that's helped me maneuver. Whether it's calling the bottom in December 2018, and then a month later saying, now whenever Bitcoin bottoms, we have that big move up of people start front running, and we see it, and I call Bitcoin 8,400 as people are calling Bitcoin $1,500. It's how coming into the halving, I had everyone who was following positioning in, and now people are like, Jordan, are you buying the dip? Right? Jordan, are you buying the dip? Jordan, tell me when you do something so that listen, nothing I say at any point is financial advice. I have discussions with you explaining from the lens that I see the markets. I happen to have an enormous history now, a year and a half online of being, I don't know anyone else more accurate out there for as long across all markets. It's just the way it is. And anyone who's been listening here for 6 months, for 12 months, or a year and a half know that to be true. They've seen what we did throughout all different market cycles, right? On the way down, on the way up before the crash, on the way down, on the way up for the crash, and then throughout the crash at different inflection points, right? Right now, people are saying, I wish I could have gotten to Bitcoin when you did. Are you buying the dip? Well, I told you over the last couple of weeks that I'm buying the dip, right? I bought it 39. I'm not even timing it. I bought it 39,000. I bought it 33,500. Do I think that's a good entry? I think it's a fantastic entry. I think it's a gift. Now, people want to say like, well, listen, Jordan, I wish I got into Bitcoin when you did. I wish I got into Bitcoin over here when it broke out into the bull market around $9,000. I really do. Because at that point, Jordan, I would be up right now, 250% and feeling really good about my position right now. And maybe I'm a hero, Jordan. Maybe I would have sold at the top up 500%. And I wish I could have done that, but now it's too late and I miss Bitcoin. What's Jordan doing? Oh, Jordan's buying Bitcoin. Why is Jordan buying Bitcoin and what am I missing? People are looking at that 250% gain and they're like, wow, I wish. By the way, a lot of people over here when Bitcoin was at 9,000 and I'm like, Bitcoin's going to 160,000. They're like, that's absolutely ridiculous. The halving's priced in. I'm not buying Bitcoin. Oh, I should have bought it down at 3,300. By the way, we did. If you watch what happened on this channel, as the crisis came, we looked at that. What? Oh, Bitcoin's going into a bear market and it's going down to zero. No, we're buying Bitcoin. At that point, it was, oh my gosh, I need to push money onto exchanges so that I could get into my positions. If that happens again, if we see some type of crisis develop, right, we understand that we may deviate from the mean, right? Something may be off. We may deviate, but like I'm buying the dip. I understand the bullish case for Bitcoin and it's stronger today than it ever was. But nevertheless, if things go as planned according to the model, which is the expected case over here, and you're looking at what? Jordan, I wish I was participating in that 250% gain. Jordan's buying the dip. What's 250? Do you think Bitcoin's going to $120,000? Do you think Bitcoin makes it to $100,000? Right? Yeah. Do you think like when people talk about the bullish case for Bitcoin and what's transpiring here, and you literally see at this particular place in time institutions buying billions of dollars of Bitcoins, public companies buying billions of dollars of Bitcoins. George Soros over here, by the way, on the Wired. This is amazing. This is Giles talking with Adam Back. You could have conversations with Adam Back today. But you listen, like to have a conversation, you have to like participate intelligently in the conversation. When he's like, when you see the Soros Fund Management, right, is getting ready, managed by billionaire George Soros, the green light to trade Bitcoin, and Adam's like, it's funny for people with some financial memory for Black Wednesday. Do you remember when George Soros took down the Bank of England, right? Now it was Stanley Druckenmiller's idea, and here Giles is talking, like adding to the conversation. He's like, "Oh no, Adam. Oh no, we don't remember Black Wednesday or this." Like nonsense. Not he's adding to the, and then Adam responds back, right? And he's like, "Connect the dots. These are the past masters, the legends. Stanley Druckenmiller, George Soros." At spotting a trade when the emperor is wearing no clothes. They traded against and made $1 billion in a day, $1 billion of money back then in 1992. What is that today? That must be worth like 7 or 10 billion, right? They made $1 billion or $2 billion in a day trading against the Bank of England, against the central bank, right? Is that what is happening today when you take a position in Bitcoin? Are you trading against the central banksters and the central bank system? Is Michael Saylor engineering the most brilliant financial trade of a lifetime right now when he borrows cheap money to buy Bitcoin? Right? Connect the dots. These are the masters. And the emperor is wearing no clothes and putting skin in the game and leverage bet. You can't trade with leverage. Well, that's how we do it. Is how the masters do it. But if you're not a master and if you're not an expert, stay away from leverage. Experts only, right? Soros did it before and won over 1 billion in 1992, but it's tricky. It's tricky because I remember, right, what was happening in 2018, and I had a look this morning. I looked between 2017 and 2018. I remember when the headlines were that Soros was buying Bitcoin. And sure enough, first of all, he nailed it. January the 25th, right after the peak of the bull market, he says Bitcoin's in a bubble, right? But then I also see that, April, 5 months later, right? Probably Bitcoin is trading somewhere around $6,000-$7,000. You see the Soros Fund invest in cryptocurrency, right? And back in April, we saw those headlines as if they were setting up to trade. So I don't know. I'm not able to read between the manipulation of what these funds do and how they manipulate us with headlines. But they definitely do that. Like if they were buying back in April 2018, how are they setting up to buy now? Listen, stay far away from those that are evil. All right. So what else? So when I look at the chart and I look at the model and I look what model, two things. First, the first thing is, listen, if you don't see the possibility and probability for Bitcoin trading at $120,000, which by the way is no different from where I fully positioned in half my net worth to here today, a 250% gain, right? From where we are right now, mid-cycle dip to $120,000. Except, I mean, that would be a very poor performance this cycle, in my opinion. Really, that would be way lower than $160,000 is diminishing returns. That's a 364% gain from where we are today, right? What's the risk to the downside? Could we trade down to $20,000? Could we have another 50% correction? Could we trade down to $17,000 from where we are today? Of course. Manage your risk. Understand your risk. It's entirely possible. Is it probable? No, I don't think it would be the first time ever. And again, the models could break. They're just models, but it would be the first time ever Bitcoin has gone off to make a new all-time high than the previous cycle, and by such a margin, right? Breaking the golden ratio and coming back below the previous all-time high. That would be like, that it would just be way off. It would be weird. The models would be broken. Would you sell Bitcoin? No, I would buy Bitcoin. If I had any money available, I would buy Bitcoin. I might even sell my gold and silver at that point and buy Bitcoin, right? But I wouldn't sell my Bitcoin, right? What would cause, me to, but before I get into that, well, let me come back. This is so important over here, but let me come back to this question over here. You know, could you address the biggest risk to Bitcoin? Right? What would cause you to sell your Bitcoin? Could the Fed, the IMF stop it from reaching 4 to 5 million a coin? I mean, listen, I don't know that it's going to reach 4 to 5 million a coin. If you're following like someone like Michael Saylor, he seems to make it sound like it's an inevitability that Bitcoin's going to reach 4 or 5 million a coin. He has his eye set on not just $100 trillion, market cap out there. He's looking at that $400 trillion, and he really sees it. Could it happen? Yeah, it's a possibility that could happen. I'm more like looking at realistic goals. Do I see the day Bitcoin overtakes the market cap of gold? $500,000 Bitcoin. A $10 trillion market. That makes good sense to me, but it also makes good sense to me that Bitcoin is by far superior to gold and won't stop there and will go on to compete for a greater market share. Could I see Bitcoin $1.6 million? Yeah, I feel let's like I don't need to talk about $4 or $5 million Bitcoin. I think it's very loftily talking about $500,000 Bitcoin and $1.6 million Bitcoin. We'll stop there, but I'm looking over here today, right? Could the IMF or the Feds, they'll try if they want to. Bitcoin can't be stopped. We've learned that from whether it was first Russia coming against Bitcoin and then saying, "Up, we can't do that." Listen to what Putin says about Bitcoin. He understands cryptocurrency very, very well. He understands that you cannot, confine it to your borders. What happened to the Great Wall of China? The Great Firewall of China. They tried to stop Bitcoin. They can't stop Bitcoin. The miners are moving out now, but that was a geopolitical move, end game, right? And now we're looking at India tried to ban Bitcoin. Oh, India couldn't do it. You can't ban Bitcoin, right? Now they can make it really difficult, and there could be a massive state attack versus Bitcoin. But if you look at what's happening in the United States, it seems to me that they're adopting Bitcoin and they're not coming against Bitcoin. Everything that they have done is in favor of Bitcoin, right? And you'll see from time to time, Janet Yellen, oh, criminals use it for money laundering. But then you have like the CIA director be like, no, that's not true. We can follow this all on chain. And actually, they're using dollars. Are they a risk? Yeah, they're a risk. There are some great Bitcoiners who have really gameplayed this out, and you could watch and listen to their discussions. You have to be aware of all the risks. And by the way, when that battle happens, when Bitcoin comes off over here from mid cycle and dips down, and it wasn't a shakeout, right? It was a mid cycle bloodbath, right? I didn't see it coming. I wasn't looking for it. I was warning you over here and for weeks screaming, be careful of a shakeout. We could get a shakeout this period. And then, we got like a 30% drawdown. I thought that was the shakeout. We went down massively further. We traded down over 53%. I wasn't looking for it, and I'm not looking to sell Bitcoin in a bear market, in a bull market at all and ever. That was not part of my plan. Now, trading wise, yeah, I'm on the sides and I'm waiting till we break this line over here. And when we break this line, do I think that we start resembling the model a lot more closely? Oh, for sure I do. Now, I don't know if we break over here by July. I don't know if we break over here by the end of August or into September. But as we break the most important trend line in crypto, I think it's a matter of time and pretty quickly until we enter this shoot, or the trajectory of this shoot. Is it possible that we wind up breaking over here in September and the shoot goes like this and it's on the outside and then comes up, down? Yeah, then we'll have the next cycle, 3 different data points, 3-4 year cycles, and our mean is going to look a little bit wider. It's going to provide enormous value going forward. We don't know what's going to happen, but I believe once we break the most important trend line in crypto, that this model here is what we're going to be resembling, and very closely. And forget, whether or not we have the potential to reach $120,000 Bitcoin to make what I've made so far on this trade, since I positioned, as many people as possible into it, right? And this is not through other other strategies. I shared with you yesterday, how I do it on BlockFi. The return is obviously much greater than this. But here on spot Bitcoin, what we're talking about without any leverage, are we looking at $160,000? Are we looking at diminishing returns? And what would that look like? A 371% gain? That's enormous. That's like you can't do that on the S&P 500 over like 20 years. It's an enormous gain. But is that where we stop? What happens if we see something like, where I believe we're going to be, somewhere around $280,000 Bitcoin, a 750% gain from where, and people are not entering over here. People are not buying the dip. People think Bitcoin's expensive. What happens, worst case scenario, what happens if we are in a bear market? What happens if we've entered the bear market? This was the top. Well, we know that bear markets last approximately when? Approximately 12 months. And they could go down and have gone down as far as how far? As far as 85%. What would 85% drawdown take us to? What is your perceived risk? It's not the max risk because Bitcoin could go down further. Do you think Bitcoin's going back down to $9,000? Do you think Bitcoin's going to test the breakout from the bull market back at $9,000? I mean, it's the markets. Anything could happen. I don't see any type of crisis developing in the world right now. I see us mid-cycle, not Bitcoin, mid-cycle as far as the central banksters are concerned, right? They're not they're looking at tightening maybe 2 years from now. They're not tightening today. And if anything, right? And listen, you have to listen to all perspectives. If anything, we're going to see, as Raul was talking about, them actually have to go ahead and do more QE by the end of the year, right? That's probably what we're looking at over here. And if that does happen, forget about this. This could be bombastic. But right now, we have the verbal intervention going. We had things that were going on with Bitcoin itself. As mid-cycle, we happen to see this type of normal price action. And yes, John, it's exactly what I see. I see so far Bitcoin is actually mirroring the previous 2 cycles. Now, Bitcoin was a little aggressive in the beginning. The model wasn't broken over here when Bitcoin was outperforming the previous cycle. It wasn't. It was just, it's a new 4-year cycle. We got another data set to work with. It's not like the model was broken, and it's not like the model is broken when it underperforms over here. It's been an average to the upside of the previous 2 cycles, underperforming 2012, outperforming 2016, and then also to the downside now, it's still underperforming 2013's volatility. But it's also outperforming 2016's 40% pullback. This was a 53% pullback. Actually, on the downside, it's actually just an average of the 2 previous cycles. And what about sideways? Yeah, this was really long. This is actually not as long. And this one, so far, is just an average of the 2. That's where we are. I can't say anything else but make observations. That all as a model is a way to visualize an observation. And that's what I'm doing, just visualizing what is taking place. And that's where we are today, right? So anyway, how we got here, I don't know. But what I do know, and where I think most people, the model is currently broken. Keith, I don't know which model you're following or which model you think is broken. But listen, this model is perfectly on time and probably the best model you're ever going to find, right? Is the stock to flow broken? Here's the stock to flow. Is it broken because we're towards the lower deviation? No, the stock to flow model is not broken at all, right? It's just towards the lower part of the deviation, right? Listen, the same people right now who are saying the models are broken are the same people who said the halving was priced in, right? And then you had the Bitcoiners, you had myself telling you, listen, the halving is not priced in. The halving wasn't priced in. We will see, and it won't be too far from now whether or not the model was broken, right? But let's revisit this. Let's come back to this. Scotty, or who said it? Kevin, who said it? Blah, 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 blah. I forget. Whoever said it, put like a timer, October, middle of October, put the time of this date, July the 2nd, live stream, Conquering the Markets. And then I want you to come back to here. And then I want you to look objectively and say, was the model broken, or was my perception? When I hear like some guy telling me that all models are broken because one day we might have $100 trillion flood into the system, and at that point, yeah, the risk is to the upside. But the risk is always to the upside with Bitcoin, especially when there's a crisis, because Bitcoin is not going to go to zero, in my opinion. Do your own research, figure it out, right? And as soon as like whatever resources are deployed is just more rocket fuel for Bitcoin to the upside. Anyway, I'm going to play some head snack over here today in honor of the markets not crashing, in honor of being on the right side of the market. And then I'm going to take a look at what's going on with you all and see where we take it on this Friday session. Hold on. I got to do it. So, I mean, give me a break. Humility. Plan B, eat your lunch in terms of accuracy. I mean, well, so Edward, I mean, what are you talking about? Plan B's model is not accurate at all. That's the whole reason I don't use it. Plan B's model is like as vague as you can get. Like we have two models, and one of the models says Bitcoin $100,000, except that we know that it always overshoots. So we could be looking at Bitcoin $250,000, and that model is correct. Or we have another model, $288,000 Bitcoin, and we know the model overshoots. So if we trade up to $550,000 Bitcoin, the model was as accurate as can be. Look, the stock to flow is as inaccurate as you can get, and I expect it holds true, right? But it doesn't give me any type of the accuracy. Plan B's model, by the way, Edward, it didn't call the bottom of the capitulation of the last bull market. I did using my model. So don't like they're not even, it's not even comparing apples to Plan B's model is not meant, the stock to flow is not meant to be accurate. It's not meant to be accurate. So maybe it's just your understanding, Edward, but what does that have to do with humility? That's where I get really confused. Like, what does being accurate in the markets and making a living for 20 years in the markets have to do with humility? I don't get the connection. Humility is right. Like, humility is washing toilets. Humility is volunteering your time so that other people can have a spiritual experience and washing the toilets of the public every day, right? Have you done that? I've done that, Edward. Have you done that? That's humility, right? There's nothing to do with humility when you're talking about forecasting price in the markets. But if you understand models, if you understand markets, then you know that Plan B's model had no intention of being accurate. It's a macro model. It's not. There's no way that Plan B stock to flow didn't call the bottom down over here. Go check my Twitter. I did. Right over here. I called the bottom over here. I said it looks like we're buy, and I said buy low, sell high, and then over here I call. All right, we're gonna remember 1500 hyper wave BS being floating around there. The fear in the market through the roof. But my model, my accurate 4-year model, right, that has high degree of I said, wait, within 90 days, we're going to be trading at 8,400. Boom. Yeah, I got it wrong. We traded up way higher, way quicker. But again, I'm not trying, like, it's just the guide. It's just the guide. When we're down over here and I'm like 8,400 in 3 months, which happened, right? I didn't know we were trading high, but it's just the guide. And it's the same thing with stock to flow. By the way, I'm on record. I have a video, right? I'm on record on Twitter over there. And then I'm on record over here telling you, all right, we're going to trade. The video comes out like a year in advance, 10 months in advance. And I'm like, we're going to trade. Bitcoin's at $7,000. And I said in December 2020, we're trading at $18,000. Right now, we didn't. We traded higher than that. We didn't only trade to 18,000. We traded up to 25,000. I didn't know that was going to happen. But again, it's not accurate like that. It's just a guide. But stock to flow, wasn't doing it. Stock to flow is as inaccurate as you can get. So you're really far out of the game, Edward. If first of all you're confusing humility with trying to forecast price, as well as if you think that plan B, stock to flow, in terms of accuracy eats my lunch, his model's not meant to be accurate. I haven't seen anyone more accurate than the work that we're doing here. It's all on record, right? So listen, I guess it's okay to be confused, but you're confused, right? I had no idea Bitcoin, and by the way, in September, Bitcoin's trading over here at 10,000. It's on video. Go watch between the 3rd and the 10th. People like, Jordan, you still think Bitcoin's going to trade at 18,000 in December? And I'm like, of course. Yeah, absolutely. So, let's not get confused. Or like, it's okay for you to be confused, but don't confuse other people. Don't confuse, and don't interrupt Head Snack. Come on.
Conquer the markets, analyzing the charts, hitting projected targets within the margin. Find the flow, sip the matcha, and wait for the waves to come in with lobsters. The kind-hearted Jordan Fosters, working smarter, not harder to move the markers. On his way to conquer, trading and investing, drinking the coffee while reflecting on the blessing. The markets are not crashing, the prices might be slashing just to pretend they're in fashion. Hit the like button, comments, and smash it. Boom, boom, Jordan in the room, grab the bull by the horns and to the moon. Flow from the plateau, make the play. Boom, boom, it's a taco day.
It's a taco day. It's a taco day.
I love looking at the halving tracker. It's been so interesting. The halving tracker has been the best guide that we had up until we made that previous all-time high, right? And then we started looking at charts of Charts BTC. By the way, Charts BTC has been the most instrumental for helping me see the 4-year cycle, for helping me present all that work to you that I did back in 2019, preparing ourselves for everything that has happened up until today. Charts BTC's work has been phenomenal. The halving tracker was our go-to guide up until we saw price make that new all-time high this cycle. And then with Charts BTC, Ian aggressively pivoting over to watching what happens in lining charts up once they make their new all-time high. Because as it happens, this cycle and this cycle, while they're peaking with a big degree of difference, lining them up from the halving, when you line them up from the new all-time high, they peak within like 4 days of each other, approximately 150 days later. So it becomes very accurate lining them up from the new all-time high. And then we're wondering, and we're tracking both, but we're wondering, well, lining them up from the mid-cycle dip, the accuracy that gives into the top, that seems to be the best thing to do. We need to observe and watch, because we're not looking to put out there some type of like model that like, yeah, I have a big window here. I could be right between like this. That's not what we're trying to do. We're trying to have an accurate model that gives us the greatest edge, right? And you could see the stock to flow within it, and we're trading within it, but we're trying to get that accuracy that we need. What else did I want to say about the halving tracker? We love it. We're thankful for everything it's done. Whether or not right now it's the right time to use it, I mean, still to make the observations, still to give Bitstein over here the greatest credit for everything that he's done. I can't believe this only has 15,000 followers. But either which way, good stuff over there. What else do we talk about or that we're looking at today? Let me check in on the price of Bitcoin, which we haven't done. It's pretty much unchanged on the session. It's down 0.67%, trading at 33,342. The dollar is completely unchanged. Perhaps putting in a doji today. That, a doji, by the way, is the sign of a market turn. If you look over here, the last time we came into resistance, we put in a doji, right? You can see that candlestick over there. Is that what's happening again today? I don't know. We'll be observing, we're watching. Next week's a big week. We'll be checking it out. What else are we looking at? And who are we looking at? Man, oof. That's a tough one to own in. That's a tough one, brother, right? Oof. I bet you wish you just owned Bitcoin the whole time, but that's a tough one. That's a good one. Edwards concerned about humility is overshadowed by his arrogance. Look, listen, I mean, I don't know if you're talking about mine or Edwards or whatever, but call it as you like and call it as it is. Arrogance, confidence, pride. Listen, you're a lot of time when people are presented with something they're not used to, there's a lot of friction there and they don't like it. That's fine. I don't really care. It doesn't matter, right? If you can't understand that the person that you're talking with, having a discussion, is a couple of things. First of all, authentic. Second of all, transparent. Second of all, accurate and correct, thought provoking, critical thinking, then that's on you. If the message is not like as delicate as you're used to and being taught, well, then whatever. Like, it's YouTube, you could go wherever you want. I don't really care. But if someone's coming out there and they're addressing things like, you have no humility because Plan B's model is more accurate than yours. All right, let's talk about that. First of all, you're very confused on what humility means. You're very confused. And if you're talking about accuracy and you're talking about models, again, you're very confused, right? But we'll talk about it because, listen, although I understand the strength of the silent majority, there are other people out there just joining for the first time, and they see a comment like that, and they don't understand markets. They're here to learn. They don't know anything about Plan B and his model or the purpose of it. And the purpose of it is not to be accurate at all. It's just simply not the purpose of it's as wide of a variance as you can be given, right? But they think that, oh wait, I heard it on the internet, so it must be true. Either way, don't interrupt head snack. That's the signal that we get above all signals, right? Here's an important question. I missed it. Let me check it out. I'm a little nervous about decreasing Bitcoin supply after the blow off top. Okay, price will drop and the institutions and governments will scoop up supply. It may be harder for reaccumulate. There was a thread that was posted on Twitter yesterday. If you saw it, I just want to highlight it because it came from one of the comments on the YouTube, and it was talking about why someone doesn't want to sell. Right? Let's look at this over here. I was planning on selling once the blow off top and accumulating later. Now I'm considering. Alex is considering. He's thinking about it. He's thinking it through. Just holding the majority, not all, of my position. I have to say that I have to pay, this is exactly where my view is changing. And again, my view of the markets, like the markets are always changing. New information is always being, let's say, produced. And therefore, so do you. You need to, you have to be ready to change your opinion on a dime if presented with the information that warrants changing your mind and your position, right? I would sell just a small portion during the blow off top. That math would be to place me just below the highest tax bracket with a technology at early stages of exponential adoption. This is true, but it takes a while to happen. The risk now seems too high to sell it, right? And miscalculate unknown projections. Even if you sell the top perfectly, pay your tax, and accumulate. By the way, the capital gains looks like this was something that would have affected my own personal judgment about whether, and again, multiple strategies across multiple platforms, but whether or not I'm selling my Bitcoin. It looks like we're not going to see a 46% capital gains for at least for the bracket that, it looks like we're not going to see those type of numbers, and they could be substantially lower. That is going to, because why? It's June. We haven't seen any legislation passed or even presented, right? So odds are we're not going to be seeing it. Well, that makes me more apt to sell the top with some of my strategies, right? Now with other ones, am I going to hold and just borrow against? Maybe and probably, and I don't know. Or, another strategy that a lot of people should probably be thinking about and or using, but you have to know what your risk is and how to manage it, is not selling any of your Bitcoin, right? And just using some type of hedge in the future markets, where that whatever downside risk happens, you're actually protected. Right? And then what happens if all of a sudden you see like an announcement like Google put a Bitcoin wallet on every single Android phone in the world, and then like all of a sudden we see super cycle or something change. Like you just have your hedge and you take a small loss on your hedge, but you never gave up your Bitcoin position and you never pay taxes on it and you're better off. That's what these markets are for, but you have to think about it. You have to, and I'm not here to tell you like what to do. This is not a signal service. And I'm not telling you at this point, do that. I'm letting you know what I'm doing and when I'm doing it. I let you know before I positioned in, as I positioned in, and where I bought the dip. I'm letting you know exactly what I'm doing and when I'm doing. I'm letting you know when I started trading, and I'm letting you know as the entry occurs. Listen, this is a beautiful trade. You're targeting 1600, but only take 40% off and let the other 60% run. I'll tell you when I'm doing it and how I'm doing it. And I'll tell you when, like, if price drops below a certain point, you're dead wrong. And then you have to follow CTM principles. We're taking the repairs, right? And by the way, when I took one aggressively at 55,500, I told you when I exited at 53,000. I told you when I took a $2,500 loss, my first loss on Bitcoin during the bull market, right? But I'm able to I'm able to manage my positions. And then when I get back in over here, right? And then Bitcoin comes off and like, wait, this is not a V. Something's wrong here. And I exit my position, right? There's nothing like wrong with that. That's what you should be doing. But I'm not telling you to do it for yourself. You have to invest your time, right? You have to figure out what's going on. You have to pay attention. When I tell you I'm buying the dip, and then like 4 months later, if you're like, oh, I wish I would have bought the dip, okay. But like it was told to you at the time, make your own decisions, right? Understand your risk. Whether or not when we come to the top of the cycle, I'm going to let everyone know where I believe the top is on Bitcoin. I'm going to say, whether I sell it or not, or across which strategies I decide to sell, or if I hedge that positions in the futures markets, or whatever I do, I'm still going to let you know, listen, price just went from 100,000 to 200,000 in 3 days. I think this is the blow off top. I'm not trying to catch it, to the dollar, but like, listen, this is the top, not financial advice. Trade at your own risk, do your own research. But if you could find better signal, better accuracy, then I think that you should do that, right? I think that if you feel that like the confidence it takes to do this, which is massively difficult. I'm competing against the giants in the world. Like the financial markets attract the brightest minds, right? It's a zero-sum game. This isn't like flag football. This is full contact. Like, if the whatever overconfidence bothers you, whatever, go somewhere else and go listen to Boom Boy talk about whatever they're talking about and like have fun staying poor, right? But don't confuse humility with confidence, right? Humility, again, is doing whatever you have to do, right? Humility is putting the Lord first. That's humility. All right. I feel like I didn't get enough head snack this morning. I want to play a little bit more head snack over here. Check a couple of comments and see what else is going on this Friday session. Old school Friday session. Oh, but so listen, is it possible that we come into a blow off top? Is it possible? How did you do it? I want to know when you do it. I'm buying the dip now. Listen, is it possible as we come into blow off top that something happens because the institutions are here? Look, the institutions are here and we just drew down 53%. Only the institutions are not selling. And the whales are not selling. The whales are buying. I'm buying, right? The people that were preemptive because of the 4-year cycle and because of the model and the large whale wallets in Bitcoin, which you could track on chain, who were buying preemptive because of the model, right? They're the ones that are buying again right over here. And they were unloading this whole way. I was not, they were. Now you saw me on this trade. It's true, right? It's true. I put on the breakout, I put 4 extra Bitcoin into here, right? And then over here on April the 4th, I took out 5.24 Bitcoin. So I got lucky. That's just luck, I think. You know, I'll call it luck because I was not really aware of that we were mid-cycle and now is the time when whales are taking a little off. I just call it luck, or I called it like I wanted to manage my risk and take a bunch of money off the platform. Whatever it was, I got lucky, right? But over here, those whales are accumulating again, and so am I. I'm buying the dip. You know, is it possible that that over here, if we hit a blow off top, that it's not a blow off top and we don't go through a bear market? It's possible. I give it about a 5 to 7% chance something like that happens, right? But I think that you have to, as we get up there, as emotions are running really wild, as it's really euphoric, as you see a lot of emotional people enter here, as you see a lot of experts all of a sudden everywhere, right? I think it's important to remember the long-term frame, the long-term game over here, right? That and I don't think we're going to see prices that high, right? The medium range that I put out is between 270 or 280,000 and 420,000, you know, and probably we're in the middle of that is what I expect. We'll talk about it as it comes.
Markets, analyzing the charts, hitting projected targets within the margin. Find the flow, sip the matcha, and wait for the waves to come in with lobsters. The kind-hearted Jordan Fosters, working smarter, not harder to move the markers. On his way to conquer, trading and investing, drinking the coffee while reflecting on the blessing. The markets are not crashing, the prices might be slashing just to pretend they're in fashion. Hit the like button, comments, and smash it. Boom, boom, Jordan in the room. Grab the bull by the horns and to the moon. Throw from the plateau, make the play. Boom, boom, it's a taco day.
It's a taco day. It's a taco day.
We got the whole head stack because I was enjoying reading the comments. There's a lot of good comments over here. Let me start with the first one, right? The end game for Bitcoin, which is coming soon. I mean, Narwhal Tacos. First, I love the name. The Narwhals, like love the Narwhals and tacos. Love the name over here. Look, the end game for Bitcoin might take a lot longer than we expect, right? The central banksters are really good about keeping that music playing. It's what they do. Is it possible that a mistake is made and causes some type of hyperinflationary event in the United States? I wouldn't have this conversation a year and a half ago. Now it's worth a conversation. It's possible. Are we going to see Michael Saylor, the bullish case for Bitcoin is last year the dollar devalued by 37%? Well, no, it's probably from this point on that we look more towards maybe not a 7% as we've been seeing over the last 100 years in the S&P 500. Maybe that's a little higher. Maybe that's closer to 12% now. But we're probably closer to a lower mean, and then the next crisis we shoot up again, because that's how the balance sheet works on the central banks. It's like right now we're doing $1.4 trillion a year being added. And then next crisis, we shoot up. Will it be 4 trillion next time? No, it'll be much greater. What it'll be, I don't know. It was only 800 billion in 2008. In 2020, it was 4 trillion. So that's a factor, a factor of 5. Is it going to be 20 trillion next time? It could be. I feel like it's inevitable. Right? It's going to happen, but is it going to happen soon? Well, that part I think most people get wrong is the timing of markets. And just because they see something, they think it's going to transpire a lot quicker. Like the housing market right now, it's out of control, it doesn't mean it's going to crash. And it could actually take a year, 2, 3, or longer for it to crash, even though it's irrational right now. Right? There you go, Kenzian. The markets can remain irrational longer than traders can remain solvent. And this is where most traders get it wrong, is on the timing. They're able to see with clarity what's going to happen, but they don't really have the timing down. And look, the risk is to the upside. The end game for Bitcoin could happen a lot sooner. Most likely, that's not what happens, right? Most likely, it continues as it's been continuing. What else? Do I still believe in Bitcoin $300,000 strongly? I still believe strongly in Bitcoin $300,000 or around there, right? The price target that I actually gave out, I should have the spreadsheet open each and every day, and I'll start doing that next week. But yeah, I mean, listen, $160,000, it could happen. $140,000 was what I set out to do, a mission accomplished. You know, all my goals achieved, and everything above it, you know, if it happens, that will be the gravy. Do I think that we're going to see $140,000 Bitcoin? Strongly, right? Do I think that we see $160,000 Bitcoin, the diminishing returns target I gave when we set out here in October 2019? No, I think we see higher than that. And if we do see $160,000, then going forward, I'm going to be like, you know what? We're seeing diminishing returns. Ted has a model that he created before he met Conquering the Markets on diminishing returns. Let's take a look at it. We need to follow that because it was right. I did it from like simple math, just imagining diminishing returns, but he's got a nice model that we could follow. Let's follow it. You know, but do I think that we're going to see higher than that? Yeah. And whether or not it's 220 or it's 300, I don't know. You know, that's why I have that big zone. And I think it's going to be somewhere in that zone. We'll see what it is. You know, we'll try to get it as best we can. Look, not Adam, not financial advice. Nothing I say is financial advice. I hope that I'm here to help add to the conversation and do a good job at helping you see things as clearly as possible. That's my hope over here. Look, the Wall Street Journal is just go check Glassnode. Don't let the Wall Street Journal tell you what's going on, because how many times did they call Bitcoin a scam? What do they know about Bitcoin? Do they have a history about being correct about Bitcoin or anything else for that matter? You know, the journal, don't read the journal, you know? And then we have the soul. Look at this. This is an oxymoron right here. The soul with the dollar sign, right? The soul with the dollar sign. Well, that's an oxymoron. You know, the most high resides the prideful and the arrogant. Well, I have someone who puts, you know, the dollar as their God, as the sign of their soul, telling me about, you know, my faith and how to live it. That's cherished right there. That's cherished. Thank you for sharing. I really appreciate that. Whatever, it is what it is. Listen, at the end of the day, you know, like me, love me, or hate me, I'm just going to be me. You could judge me. I don't really care. Yeah, I only have one judge, and that's the Lord, right? So that's all that matters to me. And really, your opinion does not matter to me. I have real relationships and friendships. People have been watching these streams for over a year and a half each and every day. Many people, because this is when the channel started gaining more traction, have been watching this channel since last March for over a year each and every day. Like, that's what's important. There's a reason people stick around for so long. That's what's important to me, right? You know, so anyway, thank you for being important to me. I'm so sorry for confusing. Listen, I make many mistakes, and especially on the internet, especially when I'm focused in over here on what's going on in the charts, and then like a comment out of context misses me. So listen, my sincere, I got it wrong. My sincerest apologies to you, you know, and I'm sorry. Really, I'm genuinely sorry. I didn't mean that. And I get it wrong. I get it wrong often, you know, and I try my best. And that's all I ask each and every one of you, you know, that's all. So I don't feel like going out. I want to see if there's any more questions. I want to put on some honeymoon instrumental here and just check out one last time, catch up on the comments and see if there's anything else we need to talk about. So there's a lot of sideways action on the peso. Kai, Brooke, this is awesome. This is really deep and something to think about. I'm not. I don't like public markets. I don't do that. Of questions about GBTC. This is not my forte whatsoever. I don't know whose forte it is. I couldn't tell you who you should go to as like an expert resource on GBTC. But what I see happening in GBTC is I see a large fund that makes 2% off of their enormous holdings. And I think right now that people that would generally be investing in GBTC have other avenues to play Bitcoin that they didn't have before. So until there's, unless GBTC, unless Grayscale is able to roll over into an ETF at some point in time, that there's a good chance there's a discount on the premium going forward. It's not my forte. I still own GBTC. I could care less about the premium. I'm selling it at the cycle top. When we top off in Bitcoin, when I'm like, okay, now I'm exiting Bitcoin, one of my strategies, deploy multiple strategies, is holding in a retirement account GBTC. I will sell it then, but I'm not trying to trade it throughout and I'm not selling it throughout. My whole strategy on that was buy for the bull market phase at the beginning and sell at the end. And that's what I will continue to do. Now, the good thing about that is that you don't need to hedge that. What do I mean? Well, if the market does top off and then like we have a fake out and then price comes up and starts making new all-time highs, or actually CTM awareness, is able to break a line of repair and show us that, this wasn't the final leg down. We're going back up. I could actually position back into my GBTC and I'm not paying tax on that. So, as far as like if you have the option in your own personal account, not financial advice, but to buy GBTC or Bitcoin, I mean, you're better off opening up a Coinbase account, in my opinion, not financial advice, and buying Bitcoin. So what else do we got? Let me take a look at the market really quick. Let me see what's going on with Bitcoin because we didn't even get a chance to look at the chart. And before we go out, I want to make sure that I have a look at it. Bitcoin is now unchanged on the day. It looks like it's holding the last line over here. This important breakout by a skin. This one looks a little bit cleaner, holding very well. And that's what I like doing, by the way. I like looking at Bitcoin from multiple angles, from multiple vantage points to get a clearer look at it. People wonder, why are you looking at, perpetual futures on Binance and why are you looking on Bitstamp? I don't trade either one of them, but I look at them just because it doesn't matter what you decide to look at. Well, Jordan, you should look at Bybit because they have most volume on it. Well, if you want, but again, at the end of the day, who's been all signal. And this only signal that we have right now going forward is that things are still unclear. It's quite possible that the low is in, right? It's quite possible that it's not. We don't know. If we make a lower low, is it most likely contained somewhere in this area? Most likely, but it's only a matter of time, in my opinion, before we take out the most important trend line in crypto. And I don't have the timing for that. I don't know if that's next week. I don't know if that's next month. I don't know if that's into September, but I do believe we're going to be taking out that most important trend line in crypto. And when we do, you're going to understand why this is the most important model in Bitcoin. And, you have a lot of different people offering their opinion on a lot of different things, including Michael Saylor. And he's telling you, he's screaming at you that all models are broken, that the dollar lost 37% of its value last year. Well, the model Michael is using is that the dollar lost 37% of its value last year, so that should continue. Therefore, all the models are broken. Doesn't make sense, because if you're following what goes on with the Federal Reserve, they go through periods like this, right? It's not like the dollar lost 37% last year. It's going to lose another 37% this year. Maybe it loses 12%. What do you think the S&P 500 is going to be up this year? You think it's going to be up another 37%? What is it up so far this year? I want to check it out. Whoa. What's going on over here? We lost it. Let me come back over here really quick. I don't even know what just happened. I don't need to know. S&P 500, let me find it. I'm looking for December, January the 1st. Where are we? Coming in. Right over here. S&P's up 17%. Woo! Maybe Michael's right. Is it? Are we going to lose another 37% over here? I mean, is this? I don't think so. I genuinely don't think so. And again, why I don't? I'm bullish on here on the S&P 500. That's not correct, is it? Are we looking at the S&P up? A massive. And what's Bitcoin up, by the way? Is Bitcoin up on the year? That's the question I want to know right now. Oh, well, listen, even with Bitcoin down 53% from its, from its yearly all-time high, it's still outperforming the S&Ps. Do you think this is where Bitcoin ends? Do you think Bitcoin comes out? I'm buying the dip. Do you think Bitcoin breaks out over here and then boom, either which way, the purchasing power continues to, I don't even know. Thanks for Alan. It's been a while. We haven't deserved head snack in a while, but we'll get back into it. Does he believe in hyper? I don't know if he believes that or not. Listen, the one caveat asterisk we have to add is that when countries experience hyperinflation, it unravels very quickly. As people are telling you right now that inflation is transitory, right? As the macro bros are telling you right now, the whole market's been wrong for the last year and a half, and it's deflationary, even though we admit it was inflationary. I don't know what happens from here. I'm watching the market, right? And we'll see. I'm watching the market to find out what the next near-term move, next 3 to 6 months move is on it. But I think the inflation is here to stay. However they gauge it in the CPI and what it looks like year over year. A year from now, we just saw the hottest print year over year on inflation. A year from now, it's not going to look like that. A year from now, it'll probably only have risen 2%. And they'll be like, see, we kept it within 2%. Yeah, but it keeps rising, and the way that you're calculating it doesn't make any sense. The inflation's here to stay. It's a question of when that next hot jump up happens. And I think that we're entering a period right now where it's going to level off for a while. I think if all of a sudden it starts getting out of control, that would be really worrisome. that would be a sign that we could be a step closer to a hyperinflationary event and or hyper Bitcoinization. And you all know a few weeks ago I put out a video talking about the odds of a hyperinflationary event, hyper Bitcoinization has gone up in my opinion, right? And I went from like 5 to 7% up to about 8 to 12%. So I do see that possibility increasing, but I think people have a really difficult time timing markets. Or really, people that are able to see what is going to happen have a really difficult time timing it. Michael Berry, right? These guys is really bad at timing markets. Like he's really bad at it. And yeah, he gets it right once every, 15 years, but in the meantime, it's not so easy. And again, that happened to me in 2003. I started seeing the housing market out of control. And by 2004, I'm telling everyone it's going to crash, right? 2005, I'm sitting down with people who had like significant real estate holdings and telling them that the housing market is going to crash. And they're laughing at me, telling me, well, I don't own any real estate, so what do I know? But I was way wrong. It didn't happen for over 2.5 years later. You can't be on the wrong side of a trade for that long. And I was. And the right side of the trade was being long the housing market, right? For a lot longer, for 3 years longer. And that could be happening right now. The housing market seems insane right now. But what seems more insane is what's happening to the destruction of the dollar. But it's not just the dollar, it's all fiat currencies across the world. And it is true, right? The dollar is the best looking of the bunch, right? Is it possible that the digital yuan in the future looks better? Maybe, but not right now. Not even close. It's the dollar, and they're all no alternatives when you look at fiat versus fiat. But if you look at fiat versus gold, what's better, the dollar or gold? It depends, and it kind of goes like this a little bit. What's better, the dollar or Bitcoin? Oh, now we don't even have to have a conversation. That's a no-brainer, right? But how soon that unravels and how that transpires, I don't really know. We'll see what happens. It doesn't look to me like that the Fed right now is getting ready to do anything. It looks like they're in a holding pattern. They're continuing the $120 billion of QE purchases a month, the $1.4 trillion yearly. The balance sheet is growing, right? The central bank liquidity continues to grow. Are they pulling it off? No, stocks continue to go up. They do. Are stocks attractive? Listen, let me just talk about this for 1 second. I follow the equity markets from afar. Me following the equity markets from afar has provided more beneficial on the Nasdaq in 2021 than Market Watch or anything else you could be doing. But let's call that as it is. Like coming out, destroyed this greatly, right? Then this area was fuzzy. Are we going to make it out, or are we going to come in and test the lows? In April, I put out the video, right? It's possible we take out 2,500 on the S&P 500, and it's also possible we trade up to 4,100, right? And then it was soon after, as we broke out, no more selling stocks. You have to follow liquidity, and it was no selling stocks. And it's hard coming off of aggressively selling and holding positions to the downside and then flipping long. That's what takes a lot of expertise. That's not easy, right? And the macro bros, by the way, they kept selling, insolvency event, it's the whole way, and continued, right? And then it was up to the August of 2020 in the summer when I put out the video and I said, equities are no longer interesting. Equities are they're not interesting for me. At this point, I shifted all into Bitcoin and shifted all of my focus to Bitcoin with you. And then you saw what Bitcoin did from that particular moment over there back in July 2020. I can't even find, we're down over here, July 2020, right? In the summer, it was the beginning of August. And then over the next 2 months, we broke out of the bull market. And boom, my focus was on the right place at the right time. But that wasn't the end of equity markets. we had a massive melt up, and I didn't participate in any of that. And my timing was off. If you want to get it right and you want to be the best, like there was a massive move here that I did not participate for many different reasons, and you can't have everything, right? Including mentally. You could only keep your focus, right? So focused on, and for me, it had to pivot to the most important trade that matters. And rightfully so, you could see that. But nevertheless, there was a lot of room to the upside over here on the S&P 500 but I was right where at that point equities are risky. Why do you say that, Jordan? Because as quick as we went up, we went back right down to where I said equities are risky. And I didn't, a lot of traders lose money in this type of volatility, right? And then I stayed aside. I stayed aside until after the election. And I had this drawn out over here for you after the election, right? And as we came up and we made the breakout and the retest, I said, all right, this is a good time to go long equities. I'm not doing it. I don't have any business doing it. I'm trading Bitcoin, again, rightfully so, because Bitcoin went ballistic. But we talked about that being the right time to sell it, to buy it. And I haven't really been tracking or following it since. And it continues to make this massive move up. The only time that I really look at it with you is at important parts. If we're breaking down, if we're about to see a big structural shift in the equity market, I'm going to be talking about with you. I'm going to be pointing it out. As it happened over here, do you remember? Price was coming down right here. Everyone's talking about the markets crashing. It wasn't long ago. So most of you remember this. And I put out the trend line. And I said, well, as long as we stay above that trend line, the bullish structure's in place. And we wound up holding it. And then we came in again and held it twice. It's the only time that I'm going to bring up the equity markets for you when we're at a pivotal point. I think we're at one of those pivotal points right now. Why do I say that? Well, we just broke out over here to the upside. This was the range we're in. We broke out to the upside. We're retested and resuming off of it. So yeah, everyone can see the resistance here. By the way, this resistance that we're into today, that continues. You have these clone trend lines all the way through this whole area. I'm not getting caught up in the noise though. I'm trying to step back over here. And the next warning sign for the equities will be if we come into this range over here, right? That could be trouble. And yeah, we could also break out to the upside and put in a blow off top near term or bigger term. But right now things are looking very bullish over here. We're mid channel and we just broke out to the upper side of this pattern. It looks very bullish. I'm sorry for all of those who talked you out of your position the last couple of weeks with all of that fear and telling you the markets are going to crash. The markets are not crashing. We got Head Snack helping us remember the most important thing. And when they're crashing, we'll be there. And we're watching for those technical breakdowns, only we're not seeing that right now. We're not seeing that on the Nasdaq either, right? We'll continue to watch it. Yeah, this is to see that this massive move on the equity markets, 13% in a matter of a couple of months. Is it worrisome? Yes. Could it be signs of the illness in the financial system? Yes. Did the Venezuela stock market go through the roof as the economy was absolutely guttered? Yes. 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 You're not actually gaining more purchasing power by being long the equity markets. You're holding onto your purchasing power better than if you were holding dollars. If you want to increase your purchasing power, where are you invested as Bitcoin is bull market phase in its bull side? I'm invested in Bitcoin. Everyone, I hope you enjoyed the session. I know I did. I got to see if there's anything else we need to talk about. I could explain why XRP is trash. I'll take a go at it. It's trash because the company Ripple owns the majority of the float, and the way that they fund their company is by selling the token XRP to retail. I mean, listen, start at first principles. First principles, the company owns the majority of the float. The company's actual business model is to fund the company Ripple by selling the token XRP to retail. Have fun staying poor, How else do you want to look at it, But there was a couple other things. Something about a pool and getting a pool. I don't know, Brooke, I'm not sure where you're going with that, but hold on. Thanks, man. Bye for a while. People tell me that I sound exactly like Vince Vaughn. You too, Steve. Have a beautiful weekend. Wow. Is that a 2-hour session? Have we been 2-hour session, classic Friday. Thank you for spending the time. Oh, this is what I was looking for. Michael Saylor says he doesn't believe there'll be a 70% bear market correction. That will be a super cycle, right? Well, super cycle we defined as 60% or less, right? If we have less than a 60% drawdown in Bitcoin, it's a super cycle. 70%, between the area of 60 and 80%, it gets a little fuzzy. Do you call that a bear market? It's very tough, right? That's open for debate, I would have to say, right? Between 60 and 80%, I expect there'll be an 80 to 85% drawdown. A lot of people were saying that, listen, throughout this 2021 move here, that the institutions are here. There no longer will be volatility to the downside. It's why we're only seeing 30% drawdowns on Bitcoin. And then smack back to reality, we saw a 53% in bull market drawdown. If we saw a 53% drawdown in the middle of the bull cycle, do you think that it's possible in the bear market we see a 70% or greater drawdown? Why not? I would have to say that it's highly possible, highly probable, right? And institutions and funds, they all have, they're constantly rebalancing. A public company putting Bitcoin onto their balance sheet doesn't have the same criteria or mandate as an institution who needs to rebalance their portfolio both to the upside and to the downside. So different strokes for different folks. It's too soon to say whether or not we're going to see a 70% drawdown in the bear market or not. But Michael Saylor, you guys, there's a tension here because you all know that I'm a big fan of Michael Saylor, and I am. That's the truth. At the same time, do you remember when he said to us over here? He said over here, the fact that Bitcoin traded down from 40% down to 30% and only had a 30% drawdown and didn't go lower was proof that there were no longer bear markets or something ridiculous like that. And I called him out on it at the time only because it was just not correct reasoning, right? And Michael Saylor is absolutely brilliant. He's the Chad of all Chads, but doesn't make him infallible by any means. And he gets 99 or whatever correct. But there are some things just worth pointing out where, listen, he may not, and it's not trying to poke holes in his argument or anything like that. It's not trying to find fault with something that's so solid. But when something is, put out there that is not correct and it could influence our own opinions, well, we want to address that, and have the ability to look at it, not just objectively. And like, well, is that fair to say? Is that right to say? Should we keep in mind that the man who's following no models, up against a model that has been proven correct for the last 10 years, that we should therefore abandon the model before it breaks? Or should we be aware that the risk is to the upside, right? Or should Michael be aware that actually there's massive risk to the downside too? And Bitcoin, my stop loss is 0 because we might see some type of unforeseen event that takes, spikes it down. And what happens if Bitcoin trades down to $9,000? Is MicroStrategy liquidated and belly up? I don't know. I don't have the answers to those questions, but I do know that obviously everyone who's participating in the market is taking risk. Understand your risk. So everyone who stuck around, thanks for spending the time here today. And that the hardest thing about a 70% drawdown in Bitcoin, if we drew down 70% from today and like through the rational route, his definition of a bear market is after Bitcoin trades down 70%. I ask any one of you, if Bitcoin traded down 70% back towards the previous cycle high, would you sell Bitcoin or would you be looking to buy Bitcoin? I know what the answer is for myself and why. Do you? Because if that happened over the weekend and Bitcoin traded down to 9, are you selling Bitcoin thinking that something's wrong and price could go lower, which it could, and could it even then go down another 50% and back towards 9,000, retesting the breakout of the bull market? I mean, would you sell your Bitcoin then? Are you selling your Bitcoin without a fatal flaw? And even if there was a fatal flaw in the code of Bitcoin, as recently, right, the devs from Bitcoin Cash, they found a fatal flaw in Bitcoin's code. They found an inflation bug, and they let the core devs on Bitcoin know, listen, we found a bug. Here's the bug. And they went ahead and they fixed the bug. But if there was a bug in Bitcoin, right, at that point, do you think that is enough to destroy Bitcoin? Or do you think that enough people in the world have already come to believe in Bitcoin and the bullish case? Money is just the belief, right? Money is just the belief. Do you think that people would then be forgiving enough that code, that bug could be repaired and we move forward? I don't have the answers to those questions, but I think about them, and I think about them often. And I think you should too. All right, everyone. Thanks for bearing with me here for this marathon session, because you remember in the Fridays we used to do it all the time. We used to have like I think this one was a little fired up, a little strong, a little ranting. I don't know where it came from, but here it is. I know a lot of people don't like that side. Whatever, but I like it. It's the passion in me for the markets. It's the passion. And by the way, you want to see me get fired up? Let's talk about the faith. You want to see me fired up? You want to see my passion come through? Let's talk. Do you think you're going to just, are you going to misconfuse that with arrogance and humility? Or are you mistaking that for passion? For passion of the love of the Lord, for passion of the faith? Are you gonna think that that's arrogance because I'm showing my passion? I also have a passion for the markets. It's true, and it comes out passionately, right? Many people aren't ready for that. A lot of people are on like Zoloft and other like mood like levelers because they can't take it. This is not for you. That's all. Many are called, few are chosen. When we get to the finish line, right? When we're sitting down and we're looking at like everything that we've built over the past 20 years, and we're looking at all our grandchildren and the future that we've created for them, there'll be some of us there. Many will not be. Many of you got caught up in the comments on the internet, and like the free world has you shook. You don't even know which way is up anymore, and you're lost. And I'm here, and I'm trying as a beacon of light to help you get on the right side of the trade, the right side of the markets. I'm here trying to help you see the world in a different light. Many are called, few are chosen. Listen, Jeff, I don't want to, my biggest concern at selling the top is the weakness of the dollar. Listen, you have to consult the dollar milkshake guy. You have to follow Santiago Capital, the milkshake theory, because it's real. And it played out, and it played out recently, and it'll play out again. It's going to play out again. That's the whole thing. This is the dollar milkshake playing out during a dollar liquidity crisis. And the way that the system is set up is that there will be another dollar liquidity crisis in the future. Only right now, that's not what we're seeing. We're seeing an excess of dollars, right? But it will play out again, right? And when it happens, it will affect Bitcoin, right? Bitcoin is going to $100 trillion market cap. I don't know that I believe that. I, Jordan, personally am comfortable with saying I see Bitcoin, between a 20 and a 30 trillion dollar market cap. It's going to take a lot of work to go there. A lot has to happen and a lot has to work out right, but I could see that happening. I feel really confident about, a $10 trillion market cap, the market cap of gold, Bitcoin superior to gold in almost every way. But, anyway, I don't know. What are we talking about? Is that a dinosaur shirt? This is the Grand Tetons. This is the Grand Tetons over here. Jackson Hole, Wyoming. My favorite mountain in the world. Yeah, I bought the dip. There's a bunch of YouTube videos where I'm talking about, listen, I'm buying the dip. In this area over here, I bought the dip. And then I showed it to you over here, right? I showed it to you yesterday in yesterday's video, right? Mid-cycle, I took another $65,000. This whole way up, I've been having this huge tension. I'm saving money for a year, and I want to buy Bitcoin, but that's not my plan. My plan was fully positioned into Bitcoin, half my net worth, around $9,000. And my plan is to sell that at the top. And this whole way up, I have this tension. I don't want to hold dollars. I don't want to hold them. But I don't need to buy more Bitcoin. And it's just like a tension. And then we had a 50% correction. And I'm like, everyone's calling the top of Bitcoin. Why didn't you sell your Bitcoin? Well, I'm not selling to the market top. I'm buying Bitcoin. I'm buying the dip. I bought the dip, because everyone, as we continue to see this play out, as we continue to see the most important trend line break out and the next phase of the bull market take place, Jordan, how did you know that was going to happen? Because Michael said that there's no models and all your models are broken. How come your model worked again? How come? He told me all the models are broken. The risk is to the upside. Well, I'm buying the dip and that's it. There we are. All right, everyone. All right, everyone. Here's the thing. Tomorrow, we got a beautiful conversation. It's with Justin. It's absolutely phenomenal. You're going to enjoy it. It's going to go live in the morning with the cup of coffee. It's conquering the markets to the core. Until then, thanks for spending the time with me. I really enjoyed this one, and I'm grateful for it. I'm grateful for all of you. May God bless you. Have a wonderful day, and I'll talk to you soon.